Hey everyone, let's talk about BigBear.ai again, because a lot has changed recently, and if you've been following this stock, you already know it's been a bit of a roller coaster. Over the past few weeks, many of you have been asking for an update, and honestly, March turned out to be one of the most important months for this company in a long time. We got earnings, major financial updates, strategic moves, and even some decisions that confuse the market. And here's the interesting part. The overall picture right now is mixed. There are some very strong positives, but also a few things that investors are clearly not comfortable with. So in this video, we're going to break it all down in a simple way. What actually happened, what it means, and what could come next. Now let's start with the latest earnings report because that's where the story really begins. BigBear.ai reported its Q4 results, and at first glance they weren't very impressive. The company generated around $27 million in revenue for the quarter. And that number came in below what analysts were expecting. For a company trying to position itself as a fast-growing AI player, missing expectations is not exactly the signal you want to send. But here's where things get interesting. When you move away from revenue and look at the company's financial position, the entire story flips. BigBear.ai has dramatically cleaned up its balance sheet. In fact, the company reduced its debt by more than 90%. That's a massive shift in financial health. And not only that, they ended the year with over $460 million in cash and investments. For a company of this size, that's huge. This gives them something very important: flexibility. They now have the ability to invest, acquire, expand, and survive even in uncertain market conditions. So on one hand, revenue is underwhelming, but on the other hand, financially the company is stronger than it has ever been. And this is exactly where the tension lies. Now let's talk about future expectations. Management provided guidance for 2026, projecting revenue somewhere between $135 million and $165 million. That translates to roughly 17% growth. And while that's not bad, it's also not exciting. In today's AI-driven market, investors are used to seeing companies grow much faster. So naturally, the big question becomes, is this really the growth trajectory? Or is management just being conservative? Because here's something important to understand. BigBear.ai operates heavily in government and defense sectors. And in that world, revenue doesn't always come in smoothly. It can be unpredictable. Contracts take time, approvals get delayed, and payments often depend on specific milestones. So it's possible that the company is only guiding based on what's already visible and not including potential future wins that haven't been finalized yet. But at the end of the day, that's still just a possibility. Right now, investors can only judge based on what's officially projected. Now let's move to another major development that caused a lot of noise in the market: the share authorization decision. The company approved an increase in its authorized shares from 500 million to 1 billion. And as soon as that news came out, the stock reacted negatively. Why? Because investors immediately started thinking about dilution. More shares means existing shareholders could own a smaller percentage of the company in the future. Management, however, explained that this move is about flexibility. They want the ability to raise capital when needed, especially for acquisitions and strategic investments. And when you combine that with the company's already large cash reserves, it essentially creates a powerful financial toolkit. Speaking of acquisitions, one of the biggest moves was the purchase of Ask Sage for around $250 million. This is actually a very strategic move. Ask Sage is focused on secure AI systems, specifically designed for government and defense environments. That means organizations can use advanced AI tools even in classified or sensitive settings. And if you think about where AI is heading, especially in defense, this fits perfectly into that future. But here's the catch. So far, this acquisition hasn't produced any major headline wins. There haven't been big announcements or contracts that clearly justify that price tag, at least not yet. So again, we're seeing the same pattern: strong setup but limited visible results. And it doesn't stop. The company has also been working on international expansion, including partnerships in the UAE with organizations like Edge Group and AD Ports. On paper, this looks like a big opportunity. But so far, it's still in the early stages. No major commercial deals have been officially announced. And then there are the government contract programs like Oasis Plus and Seaport NXG. Now these are important, but they're often misunderstood. Being part of these programs doesn't guarantee revenue. It simply means the company is eligible to compete for contracts. So once again, BigBear.ai has positioned itself well, but the actual money hasn't fully started flowing in. Now let's talk about something that caught attention more recently. The CEO's equity package. The CEO received a large stock-based compensation package that will vest over several years, extending all the way to 2029. This is actually a positive signal in some ways. It shows long-term commitment. It aligns leadership with the company's future performance. But at the same time, it raises an interesting point. You now have a situation where the company is increasing its share count while also rewarding leadership with stock, and that creates a natural concern about dilution. At the end of the day, investors will only accept dilution if it leads to value creation. If the company uses that capital to make smart acquisitions and generate strong returns, then it makes sense. But if not, it becomes a problem. And right now, that outcome is still uncertain, which explains why the stock has been so volatile. So the big question is, what could actually change the story from here? There are a few key things to watch. First, real contract wins, not just eligibility, but actual funded deals with clear dollar values. That would immediately show that the company's strategy is working. Second, a major deployment or success story from the Ask Sage platform, especially if it comes from a high-profile defense or intelligence customer. And third, tangible results from international partnerships, like real projects coming out of the UAE deals. Any of these could act as a major catalyst, but none of them are guaranteed. And more importantly, the timing is unpredictable. Government contracts don't follow a fixed schedule. So where does that leave us? In simple terms, BigBear.ai has done a lot of the hard work behind the scenes. They've strengthened their finances. They've built strategic partnerships. They've expanded their capabilities. Now comes the most important phase. Execution. Can they turn all of this into real consistent revenue growth? Because until that happens, the market will remain cautious, and ultimately the next few quarters will decide everything. This is not financial advice.